When we look back at India and in last, possibly last 6 months or 9 months, I'm seeing one thing is that many companies can raise money, definitely, but very few are investor ready. When you want to grow up beyond a point, you need to grow in a bigger shape. But for that, you need to be investor ready because investor comes with their own whims and fancies, whether we like it or not.
Hi guys, this is Bhavesh here from Tracxn. We have with us Rakesh Gupta. He's the founder and CEO of SayeNvest Caps Advisory Limited. Uh, Rakesh basically is a highly experienced entrepreneurial international management professional with expertise in executive and board management, strategic division, and a strong performance track record. He has over 30 years of experience in banking, finance, and investment advisory, including family offices. His stellar qualifications from the Wharton School, right, specializing in asset and wealth management and private equity, and an international certification in corporate finance from the Columbia Business School, specializing in fundraising, M&A, have really made him an innovative and successful financial and strategic advisor to leading financial institutions. Rakesh, thank you so much for being with us here. If you can just throw some lights on your background and how did you get started and how did Sane Invest come into the picture?
Thank you, Bhavesh, for inviting me for this. Uh, I've been investment banker for over 3 decades, ran some of the iconic banks, including the family offices as a CEO. Uh, and it's been a very, very entertaining journey. Why do I use the word entertaining to a banking or a finance background? Because entertaining, because it gives you a complete five set of experience within your journey. So if I really go back, started off in Calcutta from a middle class family, just the way we all be come from. Gradually built up my own career with regard to studies, and then did my masters in India, and then moved to banking, primarily with insurance, and then with tech, and then with banking again. Uh, was doing well. Then one fine day, the opportunity came, and then moved to London. In between, there was a short stint in Singapore, but then gradually started building up the US, the European piece and the US piece. So quite a long journey with regard to banking. And the best part is that I always say that I am a very fortunate enough to go through the complete IA to IA circle, which is insurance advisor to investment advisor. So the entire
Wow,
journey I've gone through insurance, uh, mutual fund, wealth management, and then gradually leading to the banking and the core banking and then the private finance and the so many investment sites. So complete cycle I have gone through. In between, had a hands-on with private equity and investment management and strategy side of it. So effectively 3 decades, yes, going through the complete cycle. I know in India, wealth management is always equal to mutual fund, but
yeah,
unfortunately, wealth
absolutely.
management, if you really like the one we have been taught in the Wharton School, is completely different to that of a mutual fund investment. So, definitely, and then gradually, come 2018, uh, I left the entire corporate world. Maybe I wanted to do something different, so I went back to academia again to study more. Maybe by that time, half of the world would say, hang up the boots and do what? Uh,
Great,
some would go to mountains, some would go to biking. I went to study
amazing.
because uh, uh, a very established, noble super billionaire, a dear friend of mine, I can't name him. And he was 2 years senior to Bill Gates at the Harvard School.
Oh,
And
wow.
he made enough money. Enough means I don't know how many zeros we would like to put it. But then he gradually moved from uh, California to Switzerland, maybe to relocate and set up everything else. In one of the forums when I met him first in 2012, where I was speaking in one of those FT forums or somewhere. Uh, and he came and met me. We bumped into each other, and then he had the session and everything else.
Mhm.
And then gradually we kept the contact and again on and off because
Mm.
he was invited in all the big family office events, and I've been a family office guy for so long. So definitely, investment banking and family office goes hands in hand. And I had a chance to meet him multiple times. Come 2017, 18, in
Mm.
one of those forums, he said something very good to me. He said, Rakesh, why we are poor? We are poor not because we don't have money. We are poor because we don't have knowledge. So we do one bachelor's in 1950s, and then we've whole of our life believe that one bachelor degree in 1950s would be good enough for
Exactly.
us for the whole of the life. Actually, it doesn't happen in that way. That
I agree.
motivated me to think through because I already done my bachelor's and master's, and then I went back to study again. And then come 2017 till today, wherever I'm speaking, he flies down despite being 88, 88, 89. He comes to my sessions, he meets me, we talk about it. He is American, a Swiss American, but by heart he's a Bengali. Uh,
Oh, is it? Okay.
because he makes sure that even though he's a diabetic, but he makes sure that we both share a sweet together because he
Wow.
always believes that we would always remain friends, and he always feels he has referred me few of the billionaires from the West Coast as friends, and he invited me to one of the very private uh, drinks reception in the Bay Area with only 10 who's and who's people coming together, and he introduced me there. So definitely that man's impact huge on me about importance of studies. So that's where come 2018 I went back to study again. And in this process, when I went to Harvard, I think one of the very important subject uh, was about the management and the managing the professionals, which happens to be one of the biggest challenge when you grow up in the career ladder.
Correct.
And there, one of the days I was in the library, and I walked up to one of the shelf, and I picked up a wonderful article called uh, "Why the World Loves Rebels with the Cause and Not the Rebels." And that made me think is that, oh, good, go back to the drawing book. And then I launched SayeNvest Caps Advisory uh, with a very clear mind that we are a rebel with the cause. And one of the big reasons what differentiates us is that we create a institutional value before introducing the investors. So this is how we have created. While some in Canada, calls me, we are a very strategic strat cap company.
Correct.
But when I look back, I always say to me and my team, which is now global, we operate out of 12 cities across the world with a very big team. But then when I look back and I say, no, we need to stick to our differentiator, our cause, which is we create institutional value before introducing investors. So that has been our key, that has been our journey, and that is where I am today. Touch wood, we have now been valued as the fastest billion-dollar company in the US.
Wow. Wow. That's something, Rakesh.
Good people.
But yeah, how did SayeNvest come into the picture? I mean, you have been basically advising. I see that family offices, you help companies raise capitals, you help with mergers and acquisitions. So, a variety of things that you're actually cross-border advisory, right? How did that actually come into your thing that you had to start this?
When I go back to the same school of thought, which is rebel with the cause,
Mm.
and that's the time when I took almost 6 months of break. I went to different challenging markets, London, Singapore. Dubai was that point of time a big market. Now Abu Dhabi has replaced in terms of
Mm.
financial capital. But then when you look back at other markets, Frankfurt or maybe New York, and then New York has been my base for a longer time, then to California, to LA, and everywhere else. When I met multiple people, I realized that everybody is talking about a deal specific subjectivity.
Mm.
And that's where I felt when I spoke to a couple of my super notch clients. I felt that they are looking for a single window, operations with regard to from initiation to execution, everything together, kind of it. That's where I felt that we should be a advisory firm, not an executionary firm. And that's where
Right.
SayeNvest comes into the pictures as we are a strat cap company. We focus on strategic advisory, which is all about go-to-market, cross-border, joint venture, strategic alliances, strategic communications, including media, leading to fund and capital raising, which happens to be our forte. So fund and capital raising, structuring, syndication, leverage, M&A, private equity, whole gambit of 360-degree advisory services with the capability of funding and
Mm.
fundraising. And that is where the reason is that is where the emergence of advisory firm has come from.
Got it. Got it.
And in this
So,
process, we work with five of the top seven pension funds, nine of the top 12 sovereign wealth funds. In the sovereign space, possibly, we are possibly one of the most notable name in the world today.
fantastic. So, what do you do the most? I mean, do you do mostly advisory at the investor side, like wealth management side, or do you do advisory mostly towards the merger and acquisitions or companies raising capitals?
Okay. If I have to rate in terms of preferences and priority, we work largely on the client side on
Mm.
seeking investors or seeking investments.
Got it.
And in the second one would be M&A because M&A is very close to my heart, definitely because that's what I studied at the Columbia School. Uh, but then when we look back, is that these are the two things which matters the most. Yes, it
Mm.
helps us because of our long arm reach into the bigger pension funds, bigger sovereign wealth funds, where we have either most of them have worked with me in some capacity in the New York market or other markets, or we have been to the same school, Wharton, Columbia, what kind of it. So that helps us to build that network and build that business. But to address your point, yes, the first priority has to be the client side advisory, which is about capital raising, and then comes M&A.
M&A. Correct. So, how do you see? I mean, you know, every year post COVID specifically, especially every year we feel that now this is the year that things will turn around, right? And then something goes wrong, right? And this year again, everybody, I think globally we were very optimistic that 2026 is going to be a year where everything is going to be amazing and deals are going to happen and a lot of fundraising is going to happen. And suddenly Trump came into the picture, and then then the war started and this geopolitical issue started. So,
So
what do
I
you think?
think,
What's happening?
I'll add, I'll address to your question in two parts. Market dislikes uncertainty, not the bad news.
Okay.
Today, the geopolitical event created a very short-term volatility. But history
Hmm.
tells us that those who are disciplined investors are on a long-term fundamental rather than a daily headlines. Effectively, if you see every day, there's a daily headline coming from the region,
Hmm.
right? Market has always faced a geopolitical crisis or
Hmm.
shocks. Right? I tell you from my state of mind when I was growing up, I've started
Hmm.
seeing the Gulf War, then the big one 9/11, then the global financial crisis 2007 when I moved to London, then the COVID, then the Russia-Ukraine. So market has not really uh, immune to this kind of situation. They are now more or less prepared for this kind of situation
Hmm.
because the short-term volatility has been consistent with the history.
Okay.
But who
Understood.
survives is the one who are disciplined investors who are more focused on three things, which is
Hmm.
fundamental, governance, and innovation. If you have these three things, these are the three things which creates a long-term value.
Correct.
And if you really see institutions who have been surviving over a longer period, like the pensions, like the sovereigns, right? You will be surprised in certain situations in countries, sovereign is bigger than the central bank. We can touch base on this because one of the sessions I was addressing was all about whether sovereigns or central bank, and I had enough data to provide that why sovereigns are bigger. In certain cases, sovereigns are bigger than the central banks. Anyway, now come back to the point. So effectively, in terms of this geopolitical situation which has come and related to the investors are far more savvy in today's world, and most of them, and to be very fair to them also, they have been smart enough to find ways to negate this unexpected volatility.
Makes
In
sense.
in
Makes sense.
in either way, it could be uh, A type or B type. Now we could have disagreement with investors, but maybe because they everybody comes from different school of thoughts, as well as professionals, because they also come from different school of thought. If you ask us somebody from Yale or Stanford, they would have different take compared to what Wharton in Columbia would have, right? So similarly, there could be few things here or there, but then largely, if you are looking at these three things, which is fundamentals, governance, and innovation, it only creates a long-term value.
Correct. I mean, I think this is something that you correctly highlighted, that I think investors are these days smart enough to understand that anything can go south, right? And they are pre-prepared and they know what kind of measures to take when things don't go according to their expectations, the market expectations. So, Rakesh, how does the investment outlook look like, and what are the strategies that you have for pension funds, sovereign wealth funds, PE, and large family offices?
See, effectively, if you really look like why are they called white elephants,
Yeah.
and why are they not the part of the herd elephants kind of it, right? Mentality mindset. What differentiates them is only about what do they want to do in terms of creation of valuation, right?
Mm,
So when you really look back at how things are moving in terms of investment outlook, what does it makes the difference to them today? They When you talk to them as a normal investor, I would, when you speak to somebody, they say, what should I buy for tomorrow, right?
mm,
But when you talk to this white elephant, they have one line: what
mm.
should I buy for the next 20 years?
Correct.
Because if you really see institutions, why is it not individual and institution? Because if you really see, institutions are bigger than the individual, because individual decision making psyche is more about what I call T plus three or T plus five, right? Today till fifth
Mm,
year, or today till third year, or today till third day, or today till 5th day. Maybe this is a very pure PE term, T plus three, T plus five. But when you really look back from the institution side of it, any of these white elephants, what do they think about it? They literally look at where do you create a value, right? Where do you move
mm.
the values from? And that is what has been their mindset to build upon. Now, you might disagree with them, but today when you say outlook, so when you say outlook, then you have to look at it, where are they investing, right?
Correct.
Because they can't keep money in the bank account, because they have to keep investing to create value to support their ecosystem, people, governance, so many other things.
Makes sense.
So then all of a sudden, like, and here I might be a bit candid, few years back, fintech was the most abusive word, right?
Correct.
Then came sustainability.
Yeah.
Everybody started talking about sustainability. Today, everybody is talking about AI, right?
I wanted to talk about that.
Yeah,
Yes.
and when I say AI, because I bought two of the AI companies in the US, and I know for sure that where we are in the AI space, they are small, but they are very specific. Now, uh, even on Rome, or maybe Miami, or maybe DC, in multiple forums, you talk about, everybody's talking about, I'm doing AI. But when you start talking to them, what are the specific applications you are addressing to?
Mm,
How it's impacting A industry or B industry? Then you'll be surprised, Bhavesh, that there are no answers. Because everybody is now, I met somebody from, I think, if I'm not wrong, Mexico or somewhere. He said, I'm addressing 45 industries. I said, oh, 45 industries with what? He said, no, I'm working with them. I said, what are you working with them?
correct.
After third time when I asked him, I realized that this man has no clue what he's talking about it. Now,
Mm,
some of your listeners with this view may disagree, and may have the right to disagree, as long as they don't abuse, right? But
correct.
when you look back about how does AI is not going to be everything and kind of it. Like you and I, we grew up in 2000 series, right? Y2K came and they said that everything will shut down, right? Then the tech boom, then the internet.
Yeah,
Every every few years, if you see, there is a
there's
tech
some
crash.
disruption.
Something or
Yeah.
the else goes down, something or the else comes up. So effectively, that is where I see that AI has been. But now what they have done, a lot of these white sharks have, or white elephant, sharks may not be the right white elephant because elephant creates more of a value chain
Well,
system. Sharks are known to finish it off, kind of it. So when you say where are they investing, I would say there are three things in last 1 year I've seen, and I'll add one thing in last 3 months I've seen. One is the
okay.
data centers where they're actively investing. Second is the
Okay.
energy transition across energies type of it because maybe they were thinking about that this could be the next boom of it.
Absolutely.
Entire Middle East is now working very hard to create an alternate economy
Okay.
of oil.
Ah.
And why I'm saying that because we operate in three of the top markets, which is Doha, Abu Dhabi, and Riyadh. I must say their focus is now, if even if you take His Highness MBS's plan or His Highness MBZ's plan, they all are focusing about new alternate businesses.
It
And
has to happen.
and I meet when I meet these ministers, I must say that they have been given a very focused approach to work around. I met few of them in Rome, then I met in Abu Dhabi, then I met some in Brussels, Vienna. Everywhere you meet them, you understand that their mind is now moving away, and so that's why possibly that. The other thing which has been now the talk of the town for last couple of months, maybe last 3 months, is the defense and defense related industries.
Oh, wow. Because
Because
of this political war that's
because
happening
of
since.
his part, every country, despite being NATO and everybody else there, I met the
Mm,
NATO chief in Rome on Thursday. Uh,
mm,
everybody is doing many things, but when you
mm,
really see, it boils down to a very basic point: is that how do I secure myself?
mm,
If something happens to me, will I wait for NATO to come and I know NATO will come and everything else would happen, maybe not. I don't know. I'm not a defense expert. But I'm a more of a expert to tell you is that where all you should try to put an eggs thing. And I've seen all of a sudden defense and defense related establishment discussions has really picked up big way. And people are
mm,
talking about this thing. So there are, these are the three maybe healthcare you could add it up because of what is happening in Middle East. It is going to impact the healthcare for next 20 years. Let's be honest to accept it, right? We all
mm,
have seen what happened in Hiroshima and Nagasaki and how long that healthcare was impacted. Even COVID is now again in some part of the world is surfacing in a different format. So healthcare is going to be so these are the three, but I would add defense of late as one of the key sectors, and I would be surprised if next 12 months if these white elephants put big money in defense or defense related services and sectors kind of it.
well, so, Rakesh, I want to understand one thing over here. So, you highlight these three sectors: data centers, energy transition, right? Healthcare, and defense sectors, right? What I wanted to understand over here, I think when we talk about all these three, eventually what sums up or what comes down to is any company that is using AI. See, data centers, I'm assuming, I'm 200% sure it's majorly because of the AI, because AI needs data, right? And for that, the base is data centers and the chips and computing, right? Uh, and when you talk about energy transition, again, that also needs energy. So these are all interconnected, right? Somehow. So is that the root thing, like AI? Is that one of the reason why everybody's investing in these things, these three sectors that you're talking about?
No,
Because
I
I think what happened is, I'll be honest, like I think during the war we heard a lot of news where US as well as Israel used a lot of AI tools to actually defend their entire system. Or I think Iran used. I'm not sure what was the right, which country was the
no, I have heard Iran used it. I have heard
used
Israel also used it. But
used it.
to be very honest, almost a year back when everybody was just like flashing AI investments, right?
Yeah,
Today
yeah.
it's not. Today
Mm.
it's AI investments are happening on a application-based services. It's
Okay.
no more a carpet sweeping, bombing kind of, oh, everything is in AI. No.
Mm.
Now, if you really see, AI is now in almost every sector in small to, you can argue with me or with anybody on the magnitude of AI in different sectors, right? But if I really see AI, I would say that uh, the bigger global, largely the sovereigns, right? They are
Mm.
they are either they understand that they do not know AI everything, right? In some of the
Mm.
cases, they are partnering with one of the global AI companies who establish themselves, or else they are going on a small size but on an application side. So it's
Mm.
not somebody. I fully agree that when you say data center, energy is a by default required product of that, right? You can't do without it. But that is where I think a lot of I've seen AI investments is happening on a sector to sector basis, no more a sweeping kind of it.
Got it. But where do you see your at SayeNvest? What kind of transactions are you doing these days? Are you seeing a lot of surge in AI sector? Are you seeing a lot of surge on these three sectors that you're talking about? But again, connected to AI, this is with respect to fundraising, raising
Perfect.
capital. And
So if
then there's
I
another one called M&A.
okay, we at SayeNvest, as a part of our services, we advise client where to look at it in terms of what kind of how they should be looking at it.
Correct.
As a part of Outlook services,
Mm.
when we have been asked to come and speak about AI or AI related part of it, where we play a role,
Mm.
there we look at very specific AI application based services. Period.
Mm.
There is no disagreement on that.
Okay.
Similarly, our new fund, which is coming up, we bought an asset management company here in London and we are
Yeah.
restructuring it. Uh,
Mm.
we have a plan for $1 billion fund in next 12 to 24 months. The
Mm.
proposed pipelines have been set it up, approvals are in there. But where would we go? Because that fund is
Mm.
our own fund, SayeNvest Caps, Asset Management Fund. We would largely look at similar mindset. What I'm trying to drive is that AI, we may not be so big on AI, largely because if you take my experience, majority of the guys don't even know what applications they would say. For some,
Mm.
manufacturing and engineering would have the same kind of applications. And I would disagree with that because they both are
Okay.
two different things to look at it. Some says maybe a bit of manufacturing, we can take it out and use it at the healthcare equipment
Mm.
side of it. I say no. So this is where when I'm coming from, I'm saying no, it has to be, if it is a healthcare, it has to be healthcare. It can't be like, okay, 50% healthcare, 25% engineering, 25% manufacturing. It can't be like that, right? So this is where I look at it from our end. That's why I think when I said that, oh, no, let's do a fund. We call it as more of a financial inclusion in a tech business. We don't
Mm.
say fintech or AI, right? Or deep tech or quantum, right? We say financial inclusion in a tech business.
Okay.
So people may understand it's a fintech, people may understand it's a deep tech, we will say AI, whatever is that. We are very clear in our thoughts that how do we want to see it growing is that value creation, value creation, value creation. That has to be very simple because remember from our part is that these money do not solely belong to Rakesh Gupta, right?
Good.
We have investors backing us, sovereigns backing us, some of the big ticket investors from the US backing us, some of the PE guys, big boys of the world, my former alumni at the Wharton School. So, different sets of people are backing us. So we have to be very clear that where are we putting the money into it. So we have to be very clear on these things. What I told you is something which is more about creating a long-term value.
Mm. So, Rakesh, how is the investment climate in India is looking like, right? What is the focus territory? What are the sectors? Is it really still attracting quality capital and investors? Because we've seen in the last few years, a lot of foreign investors have withdrawn their money from the country. So, how do you see that?
Okay. Uh, India is definitely closer to my heart on the subject because we come from India. But yes, off late we have been working very specifically with India. I met the ministers in Delhi, and then I met the chief ministers of Bihar,
Mhm.
Bengal, and Assam, and some in Davos, which included Karnataka, Telangana, Andhra, Madhya Pradesh, to
Mhm.
name a few, including Jharkhand. What I felt is that, and I was very happy to see, and this is where I quote,
Mhm.
irrespective of states being ruled by any political party, when they came at Davos or any multinational platform, they come and speak in one language, which is India. So
Yeah.
there they don't find that difference. In fact, I was very surprised that I was having a wonderful discussion with Sridhar Babu, my dear good friend, Minister of IT from Telangana, and that's the time when we were talking about setting up a tech company in Hyderabad, and that's the time Mr. DK Shiv Kumar came and said that how come you go to Hyderabad, when you have Bangalore. He was the deputy
Mhm.
chief minister at that point of time. So that itself says that how good, and there was no hard feelings on that. They were very cordial as expected to be. That is what makes me believe that India has from the uh, political bickering, they have moved to investment. When it comes to investment, they all are together. Now, you asked me a very important question: what makes India today? There are five elements which makes India a far more investment focused proposition. From the West, I'm talking about. Yes, I keep on going to India once in a quarter, but that demands on the meeting, and we have India CEO and we have India team and everything else there. So I would say one is that political stability, which was missing for a longer time. The demographic dividends have started playing because a lot of realignments are happening. I'm not talking about
Mhm.
political realignments. I'm talking about classification of services and economic alignment. Alignment and
Mhm.
realignment are happening. Digital infrastructure is something which is phenomenal, and my school alumni Ashwini Vaishnoji has really worked very hard on terms of semiconductors and the railways infrastructure. At the same time, Nitin Gadkari has worked phenomenally on the road and the. So
Correct.
possibly when you say digital infrastructure, these two gentlemen has proven that road and electronic, digital, they both go highway infrastructure and the digital infrastructure, they've clubbed it together. And
Mhm.
if you really see, uh, it's working phenomena, and that itself, now some people will agree with me, some people will disagree with me that in X state it has not happened, in Y state it has not happened. But then you have to remember that when you have such a large population, to reach the last person in the queue, it will take ages. But I think they have done phenomenal on the digital infrastructure. Entrepreneurship, they could have done more. I
Mhm.
believe there's still work in progress going on. I know a couple of years back I met POG and we were talking about Skill
Mhm.
India and so many other things. How do we uplift them in terms of our
Mhm.
advisory services to make the entrepreneurs far more competent to attract foreign money, because it comes at a cheaper rate compared to the domestic market. And the domestic consumption theory, which is attracting all the world to India, including the Apple movement and everybody else, and everyone else is there now, right? Because of the huge domestic consumption. Now, few years back, we were not having one Apple store in India, official Apple store. Today, we have got four, if I'm not wrong, or maybe five, right? That itself shows that the domestic consumption theory, how it is. These are the five elements I would say that is thing. But then at the same time, I will also say that, I don't belong to that school of thought that everything is happening right. But yes, things are moving in the right direction. It could take some time, and it will take its own time. And I believe that the West was looking far more. The very first point is the political stability. That Mr. X goes, Mr. Y comes, Mr. Y first up, redraws the chart of Mr. X, and then he draws his chart. By the time he goes, Mr. X comes. So every
Mhm.
5 years, the government is changing, then the policies are changing. But honestly, I must say, not much has changed between the Congress economic policies and the BJP's economic policies, the current government.
Oh,
They are
okay.
just continuing maybe a bit here or there with regard to, uh, you know, direct cash transfers and all those things have happened. But where, yeah, I will touch base is about what made India all of a sudden a bigger player is about the digital India and the UPI, right? The
Yes.
manufacturing is still coming up to the curve. But I think that these two things, digital India and the UPI, with the Prime Minister going and ensuring that more or less every country has now started taking UPI of India. So that itself shows that how we have moved ahead. Now, the GST collections has literally given a boost to a lot of central banks who are looking at India with regard to different thoughts about how to deal in terms of currency situation. But a lot has accepted because of UPI becoming UPI kind of thing. And this entire the money transaction being recorded and documented has given a boost to capital markets, because then all of a sudden everything is now capital market driven, unfortunately or fortunately. And India is one of the most prominent capital markets in today's world, look, despite knowing it. Now I'll
Yes.
address your point that some of the FDI withdrawals and everything. Now that happens everywhere, right? Today, if you really see the geopolitical economics, right, the gold prices have gone up. I'm sure last 2 3 days has gone down, but then gold prices have gone up. Now, because of this, gold prices have gone up of the volatility. All of a sudden, you have seen a huge inflow in the US bonds, right?
Mm.
Because of the volatility, right? This is where I think, and it would be unfair to say, uh, partially it would be right also, is that all the FDI inflows have only gone to the US. No, it could have gone to other markets also, or or a large amount has been parked in the cash because of this Middle East situation. So this could be something, but I know for sure that India has been attracting a huge amount of FDI. This could be a temporary setback because the stock market has gone from the peak of 86, 80, 85, 86 to 77 now,
Mm.
the BSE Sensex. So yes, it will come back its own time. But then to imagine that the somebody who has invested in 86 or 85 will not leave whenever they make money. At the end of the day, they'll do it. Last couple
Yeah.
of days has been something good because the market has correcting itself, and some
Yes.
new investments have come big way. JP Morgan has now increased its stake to almost 10 of the uh, mid-type companies to a significant amount. So similar companies are doing it. It would be unfair to take everybody's name or not to take everybody's name. But I'm being privy. Jeffries are quite active. Morgan Stanley is doing something good. GS is always there. So yes, they are doing it their own way.
Interesting. So, Rakesh, what is, let's talk about SayeNvest. What is SayeNvest Caps planning for India and the rest of the world? Because, I mean, you're basically present in 20 plus countries
Yeah.
that you've
See,
mentioned.
today, when I talk to my West investor, they ask me very simple question is that where can I deploy half a billion kind of it, or maybe 250 billion?
Mm.
And when I say India, they say, okay, why India? And that is where I keep on going to the old stories about India used to be the cheap capital market. Today it's the innovative capital market. That's why it
Mm.
has changed from a traditional transaction to established transaction to a accepted transaction. This is the module I would say. Now, I would here say that what differentiates us with regard to what is our plan and how do we move it. When we look back at India and in last possibly in last 6 months or 9 months, I would have gone to India 4 times, if not less. I'm
Mm.
seeing one thing is that many companies can raise money,
Mm.
definitely, but very few are investor ready. That is the difference we want to play around. Is that yes, you are ready, but you are not investor ready because you have been running the institution in a very typical way
mm,
While you are making money, touch wood, very good, keep on making money. But then when you want to grow up beyond a point, you need to grow in a bigger shape. But for that, you need to be investor ready because investor comes with their own whims and fancies, whether we like it or not.
mm,
As a SayeNvest, we have reached out to them. We have reached out to government. We have reached out to them, the private entities also, to say that how we are going to create an institutional value for you so
mm,
that we keep you at a higher pedestal for the investors to look at you and then invest because India has a huge potential for investment. That's one.
mm, mm,
About SayeNvest, as I said, we started off with SayeNvest caps. And then gradually we have now become seven companies. So SayeNvest Asset Management, which has now applied for license and everything else. The FC approvals are on the process. At the same time, we launched the SayeNvest Real Estate based out of New York, SayeNvest Media Corp LA, SayeNvest Tech California,
mm,
and now we are looking at launching the SayeNvest digital financial system based out of Kuala Lumpur. Smart
mm,
AI technology, which we are going to run from Palo Alto,
mm,
which we have hired a couple of big shots from the world, ex Google and Microsoft guys who are on the board. So they are now setting it up structuring wise, and that's been backed by one of the PE houses from the US. So all these things has to have a very clear mind to invest in India and the rest of the world. But here also we have a very clear mind is about where do we invest? So we invest in our core capability sector where we have an in-house competency. That is something which SayeNvest focuses on that we will only invest where we have in-house competent people. So if somebody comes and tells me to look at crypto, I'll say, sorry, sir, thank you. We don't have in-house competency. You can do it with somebody else.
mm,
There are three sectors which we will never invest, which is tobacco, alcohol, and meat. Uh, Very clear. We'll not touch base on those sectors. But then other sectors, when I was in India, we touch base on energy, we touch base on low-cost housing, we touch base on data centers, uh, and then creating a ecosystem for the tech kind of it. So that is what it is. India happens to be our core business market. While
okay.
we have not been very phenomenal in India because we have not focused so much of India compared to what we have done on the West, London, New
Mm,
York, and California. We opened Toronto also some time back. So a lot of places where we are there, and that is where we want to see. We want to play whatever minimal role we get a chance to play in India's ecosystem. Uh, despite being our own home country, despite being our
mm,
own base. So we would like to see how we can play a key role for the India. And this fund, I have a mind that we would have a $500 million fund from Gift City Gandhinagar USD fund, which will predominantly invest in India. Rest, we are negotiating a terms with a new fund which we are buying in Luxembourg. So
mm,
collectively, we want to do $1 billion fund, 500 million for India, within India, in the USD denominator, and then the rest we would look at. So we want to go back to our investor, both from largely
mm,
from outside India, that you partner with us, you can invest with us in all the three currencies, pound, euro, and dollar. Choose the currency
amazing.
you want. We would be and we would give you the best of this because our mantra is all about long-term value creation. We
Mm,
don't compromise on the three subject which we talked about it, which is all about governance and innovation, kind of
mm,
an R&D which we look at. So a couple of things we don't mix it up.
correct. Thank you so much, Rakesh. I think this is pretty helpful for a very, very insightful conversation. I
I
literally
would
learned a
I would
lot.
end up with something which I wanted to touch base not only with India,
Yeah.
but where do we see ourselves in them? So
Mm,
I would say the next decade will not simply belong to the large economies of the US and everybody else. It will belong to those who can attract the smallest capital. Example, India or some other countries.
yeah.
Capital today is global.
Correct.
Anyway, global, patient, and highly selective. It seeks transparency, definitely, governance, innovation, and long-term value creation. India
Correct.
is uniquely positioned today's world, if you ask me, To benefit from this shift, and firms like us who are on ground in India are committed to building the bridge between the global investors and the generation of next world-class business in India. If you really see, India produces the highest number of super millionaires now, and we are very close. A lot of them will jump onto the other side because when you see 35-year-old, 38-year-old, 800 million, 700 million, 400 million in the Swiss bank. I don't know what all from where all these numbers comes. So we want to play ourselves. Our role is just not to be facilitating the transaction. This is where I would say we would create a value first, and that is where it is there. But to help to ensure that this particular situation, we create institutions that can endure this phase, this ecosystem, and that is what it is. And I believe the opportunity we have is tremendous on our hand. We have a team in New York, Toronto, California, Dublin, Paris, Abu Dhabi, Riyadh, Doha, London, and India.
Amazing,
Uh,
amazing.
in India is now possibly very senior team member, and then gradually they are hiring to build the business part. But then, as I said, we remain committed to invest in India, not to overlook my other markets because the market phenomena is
Now,
absolutely clear to us.
it's all interconnected these days. I mean, as you said.
It's purely where we create a value because at the end of the day, if you don't create a value for your client, for your investors, you asked me a wonderful question, what role we play. When it comes to capital raising, we work with the client to ensure that they get a better value with regard to corporate valuation. Because I come from
Mm.
the school where the corporate valuation is a very basic for all the M&A transactions, right? So we play a role in that. At the same time, we try to go to investor and say, because of these growth parameters, these scalability options, you should look at this because this creates more value for you. You you have a timeline for 20 years. This may come in 11, 12, 13 years because of these strong parameters. Now, those are the differentiators we create.
Interesting. Interesting. Thank you so much, Rakesh, for spending some time. What is it one, as we close the entire session, what is it one advice that you would give to the newcomers who want to join, enter the wealth management industry or investment banking industry? Because I am seeing the new generation very inclined in the financial industries, right? They are so excited to talk about wealth management or M&A transactions or fundraising transactions. I personally was very inclined in this industry a few years back, and I'm very happy to be leading this vertical because this is where my heart also was talking to me about. So, what is the one piece of advice that you would give?
One line, don't be a generalist. Generalist means you know
Jack
everything.
of all,
Don't do that.
master of.
When you become a focused person with your focus capabilities, so I would say one word maybe enhance your competency, work on your competency, and only talk about core things of your competency. I'm sure if your competency is a fixed income guy
Mm,
and you start selling exotic structured equities, even though they all are the same family, right? But people may not
mm,
like it because they say, no, you have spent 20 years or maybe 10 years in fixed income and you are talking to me about the exotic structured equity notes, right? How does it
mm,
happen, right? So effectively, if you believe any particular, let's say if you are very good in P, please focus on P. If you're very good in wealth management, now wealth management, that's why I said in India, wealth management is a particular sector. Global wealth management is about managing your entire wealth, right? It could
mm,
have fixed income, it could have cash, it could have bond, it could have uh, mutual funds kind of fund investment. It could have a sub-classification investment. Plus, it could have your private equity, a small portion. It could have all other listed equity, unlisted equity. So many other things are. That is how the wealth management has been created. Uh,
mm,
and this is where I always say that please work on your core competency and just focus on that. Don't try to be uh, jack of all
Jack
and
of all.
master of none.
Yeah.
In this part of the world, if you're master of one, that's the best. They will invite you. They'll spend time with you. They'll pay you for your
Mm.
services. That's the difference.
Thank you so much. Thank you so much for this advice. I think this is personally for me as well.
No, no, no. Bhavesh, you have been doing good. We wish you very best for you and your team and the
Thank you
Tracxn
so much.
team. And I look forward to seeing you again.
Thank you so much.